it's a very good problem to have from a municipal perspective. You know, we look at top line revenue growth just like a company would look at top line revenue growth, and we want to see if it's sustainable. So over time, we've seen a long, steady climb in our economy. We've seen a long, steady climb in the equity markets, and you know, the states who primarily rely on personal income taxes and sales taxes for revenue have benefited from this. So it's good, solid, fundamental underlying top line growth, which we view as a very positive thing in the muni world.
So have states done enough to grow the rainy day funds that they're going to need for the next downturn? Because states, unlike the federal economy, they have to balance their budget for the most part. They don't have the luxury of running deficits. Should they be adding to their reserves instead of returning the money?
You know, it's a state-by-state choice. Obviously, some states are in better shape than other states are in. Most of the states are in good shape, and they are building their rainy day funds. There's other things, though, you have to look at. One of the biggest things we look at on the expense side are, you know, pension and pension underfunding, and how much a state is funding their pension, because a pension, if it's underfunded, could crowd out other spending. So, you know, that's definitely one of the things that we look at when we decide to see what the states are doing.
I was surprised you said the most underfunded. These were not a surprise. New Jersey, Illinois, Pennsylvania, Connecticut. But why is Kentucky dealing with an underfunded situation?
Yeah, Kentucky's underfunded. I say it's sort of the silent expense. So when you're balancing a budget, you can either raise taxes or cut spending. You know, a lot of states don't want to raise taxes and also don't want to cut spending. So one of the ways you can cut spending without people really seeing it is cutting the amount of money you're putting into your pension every year. So there's a certain amount of actuarial spending you're supposed to have to keep your pension flat or grow it. And underfunding your pension is a way that generally flies under the radar. And that's essentially what Kentucky and some of the other states have been doing over the years,
right,
is, you know, not really making the hard decisions.